Hello and welcome to this week's special presentation. My name is Jim Penna. I'm the Manager of Retirement Services here at VectorVest, and I'm very happy to be hosting this week's topic, which is titled 3 Keys to Finding the Best Stocks. Here at VectorVest, we believe there are 3 things that every investor should know about a stock before buying it. What a stock is really worth, how safe it is, and when to buy, sell, or hold that stock. Angie Akers wrote a wonderful essay this week talking about those 3 key factors. So this week's special presentation is going to coincide with that excellent essay that she wrote. And she wrote there that for over 30 years, VectorVest has systematically, objectively, and unemotionally turned data into information via deep analysis to address each of these items that I just spoke about. So let's go ahead and explore further. Now, the goals of this presentation are very straightforward. Along with the essay, I want to illustrate to you how we use VectorVest to find out what a stock is really worth, how safe that stock is, and again, using VectorVest to know when to buy, sell, or hold that stock. So let's begin with stock value. Now, value, as computed by VectorVest, tells you what a stock is currently worth based upon its earnings growth rate, profitability, inflation, and interest rates. It's a lot of important factors that go into understanding what a stock is currently worth. And as Angie wrote in her essay, while many stock market gurus and investors use PE ratios to value stocks, they don't realize PE ratios do not tell you what a stock is really worth. And there's a great essay that Dr. DeLito wrote back in September of 2010, saying very much the same thing, how much more goes into the value of a stock than just looking at a PE ratio. The VectorVest value, as Angie wrote, is far superior, a forward-looking indicator that tells you what a stock is really worth. So you need to understand that a stock is undervalued when its value is above price and overvalued when its value is below price. Let's go ahead and jump into the program and take a quick look and see. Now, before I go into any graphs or viewer pages, I want to take you to the training tab along the main toolbar. And when you come to that training tab, there's a lot of great information in here, but what I want to do is come down to the download of Dr. DeLito's book, Stock Strategies and Common Sense, and I'm going ahead and click that button there. When you download this, you have access to the book. This is, again, what we refer to as the Little Green Book. It's the 3rd edition that Dr. DeLito wrote a while back, and if I continue to scroll down here, it's going to take me to our table of contents. I strongly urge you to read through the entire book, but I am going to, for now, click right here on How to Value Stocks. It's chapter 4, and I just want to show you where you can come to if you want to dig deeper into how VectorVest, the formulas VectorVest uses to value stocks, and just understand it's not just some opinion based on a current headline. This is data that is funneled into a formula that is then used for actionable purposes here. So again, I'm just going to kind of scroll through here. Excuse my scrolling, but I'm certainly no mathematician, but you can go through these basic formulas, all the things that Dr. D talks about when he created value and how to understand what a stock is really worth. So I strongly urge you to take the time, if you're interested in exactly how we do it, to come to that page within the book in Stock Strategies and Common Sense. From here, what I want to do is I'm just going to go right into the Viewers tab, take us to the Stock Viewer. And we're looking at the current Stock Viewer screen here, and the top stock is STRL, currently the highest VST rated stock within the program. But let's take a look. We'll take a look at a few of these top stocks. Many of them are what we would call either fairly valued or undervalued. Like MOD is undervalued. We would look at IBP undervalued, Par Pacific. But then we get to, here's one that stood out to me, CELH, right? We're looking at what is now an overvalued stock. Clearly, the price is at 174, almost 175, with a value at 50. But as I scroll over, we see some really good fundamental numbers here. VST is very high at 1.51. It is a top 10 VST stock, with an earnings growth rate up at 48% per year, an earnings growth rate, and a buy-rated stock to boot. So one of the things we want to look at, again, we say that we need to know what the stock is really worth. Okay, understanding that value is a snapshot in time. And at some point, we say that value and price will meet. As long as the company continues to grow its earnings and those other factors play out the right way, then the stock can become an undervalued stock. But you have to understand, if you do decide to buy an overvalued stock, understand that you're paying a premium for that stock. And as long as you know that and you take that into account and how you manage that position, that's ultimately going to be up to you. I'd rather see you with so many great candidates that are undervalued that you can go to. But as long as you know what the stock's worth going in, it's a very important part of managing the position once you're in it. Okay, let's go ahead and take a look at a graph of IBP very quickly here. We'll take a look, and I've got relative safety down below. Earnings per share is here. There's a one-year graph, and you can see how all of these indicators work together, right? If the value of the stock is based on earnings per share along with the other factors, we're going to talk more about how safe a stock is, but a lot of these things intertwine as we look at these stocks. So, and what we always like to see is the northeasterly direction on all of these factors here. So know what the stock is worth before you go in. Of course, VectorVest advocates buying safe, undervalued stocks that are rising in price. That, of course, is our mantra. And we make it very easy for you to determine exactly whether that stock is undervalued or overvalued. From the stock value, let's go ahead and go to the next thing that we truly believe you need to know is how safe that stock is. So we use the VectorVest proprietary indicator of relative safety. Now, relative safety in our program is an indicator of risk. It's computed from an analysis of the consistency and predictability of a company's financial performance. Its debt-to-equity ratio, sales volume, business longevity, price volatility, and other factors. Again, not just, an opinion of what we think, how safe the stock might be. There's a lot of hardcore numbers that go into determining what we believe is a safe stock. And of course, on a 0 to 2 scale in the VectorVest program, we favor buying stocks whose relative safety is greater than 1. So from here, let's go ahead and go back into the program, and we'll take a look at some good, strong relative safety stocks. So I'm back here in the stock viewer page. I'm going to break that back down a little bit. And as I noted, it defaults to the VST sort, the value, safety, timing, our flagship indicator. For now, what I'm going to do is go and click on the RS tab. If I simply click there, left click on that, and it's going to sort the entire database with the highest relative safety stocks coming to the top of the list. Okay, a couple of things about relative safety. One of the things I love about relative safety is the high RS tells me that, and not always, but generally speaking, all of the other numbers that go into, the type of stock I'm looking, especially for a more retirement-minded investment, is relative value. You'll see relative value numbers are strong. That's price appreciation potential. Things like the comfort index, which is the price growth persistence or that stock's ability to withstand a lengthy or severe downturn. Relative timing, of course, could fluctuate over any condition. I'm talking more about the fundamentals here. You'll see the earnings growth rates are very strong. And if those stocks pay a dividend, not all high RS stocks pay a dividend, but you'll see on that 0 to 99 scale how safe those dividends are. And usually their growth rates are also very strong. Again, not on every single stock. Some stocks are an exception to that rule, but for the most part, high RS stocks will generally have the other numbers that I'm looking for. So let's take a look at some graphs. I'm going to go ahead and just graph the top 10 here to get a sense of what a good quality RS stock looks like. Now that's a one-year graph. What I like to do with these as well, I'm going to take it out to 5 years and get a sense of the history of how powerful relative safety is. And again, early on, STM, the earnings were struggling a bit. Relative safety back here was much lower, still above 1. Okay, but as the stock moves on, we see as earnings continue to grow, that the stock price, you're going to see a very similar pattern in most of these stocks. A couple of the tech stocks, during the recent where the Qs or the NASDAQ was down, you'll see, but CPRT, another stock. Again, you can see as earnings grow, Deckers Outdoors, we own in our retirement portfolios in our coaching group. Great company, Old Dominion. So you can see when you've got the high RS stocks, remember I sorted the entire database by relative safety. And what you see is that consistent and predictable financial performance shown here in earnings per share, along with the other factors, of course, that we talked about. Now you have Facebook or Meta here, as I talked about, there was before the recent tech rally. So some of these stocks would have taken a hit, but you get the idea of how these stocks move along with earnings per share, and that's related directly back to the relative safety numbers of these companies. There's a great search within the Unisearch tool under the retirement folder called Long-Term Winners, RS Descending. For those of you who may be familiar with, we used to do what's called the birthday game, where you were able to go back in time and just choose a year and a birth date. Just for old time's sake, I can go back wherever I want. I'm going to go back to my own birthday, although I wasn't born in 2020. Just picking a date and run a quick test, right? Let's quick test the top 10 and compare that to the overall market, right? When you compare the movement to the VectorVest composite, yeah, the composite was up nicely, but the high relative safety stocks outperformed the market, right? Came out positive. You can go back and again, and randomly choose. There are a handful of times where it won't outperform, but they are few and far between, right? So if I take it to another year, let's go back. I'll go to whatever date. I'll pick another birthday. June 1st, let's quick test those top 10. Once again, greatly outdoing the VectorVest composite here. You can see how these stocks perform over time. Now, there will be some times, usually we go out at least a year or further and run that for the birthday game. But just a little revisit again of how powerful the high RS stocks are. And just one other search within the prudent folder. One of my favorites is the search called ruler stocks, where just to make the list, the relative safety has to be greater than or equal to 1.4. Search now. You'll get to see some of the good candidates here. Okay. So that is another great search for relative safety and the importance of relative safety, and just a quick look at how powerful RS can be over time. And you need to know just how safe that stock is that you're putting in your hard-earned net worth into owning. The third key factor that we talked about is that every investor, you must know when to buy, sell, or hold that underlying stock. Now, let me just preface the idea of the ratings and recommendations we put on the stock is that you're always going to match this with the current market trend, right? I don't care if a stock is a buy-rated stock and has an RS, through the roof, you're still going to wait for the market trend to be in your favor before you purchase the stock. So always keep that in mind. That mantra, right? We buy safe, undervalued stocks that are rising in price in a rising market. So with that idea in mind, let's take a look at how VectorVest uses the buy, sell, and hold ratings to keep you informed on knowing exactly when to buy, sell, or hold. So we'll start with the buy rating. Now there are 4 rules to a buy rating within the VectorVest program. And so we'll start there. Number 1, the price of the stock has to be greater than the stop price. Let's start there and go take a look at what we mean by that. The stop price in the VectorVest program is simply a 13-week moving average of that stock's price that is adjusted for the fundamentals of the company. Okay, so it's basically just an adjusted 13-week moving average. To get a buy rating or a hold rating as well, the price of that underlying stock has to be greater than the stop price. Now, this is a good example. On STM, right at the top of the list, we're showing it as a hold rating. To get a buy rating, let's go down to DHI, which is the buy rating. As I said, number 1, the price of the stock has to be greater than the stop price, which in this case it is. 113.79 is the stop. 124.53 is the price of the stock. Let's go back to our list. Number 2, the VST, or the value safety timing indicator, has to be greater than 1. Relative timing has to be greater than 1. And not only that, but the price not only has to be above the stop price, but it has to be diverging away. It has to be moving above and rising in price. So let's go take a look again at DHI, and we can see that it is, because it's a buy-rated stock, the VST we know is above 1, relative timing is above 1, and the stock currently is diverging above or away from that stop price. So when we go to STM, if I pull that stock up on a graph, we'll see why it's a hold, even though the VST, actually relative timing is below 1 as well. Okay, so let's put it on, it's on a 1-year graph. And if I add the stop price, okay, you'll see it's certainly not diverging away from the stock price right now. And RT is below 1 as we look at it. So that's why this is a hold rated stock. Okay, and if I put DHI back up, we can look at it on the graph. It's above the stop. It's diverged away from that price. Relative timing and VST are above 1. Let's go back and we'll talk about the sell price. Okay, so simply the price of the stock is below the stop price. Now, surprisingly, if I scroll down within these top VST stocks, there's actually one sell-rated stock here, and that is Rambus, RMBS, and we can use that as an example. The current price is $52.28. We come over the stop price, or that 13-week moving average adjusted, which, by the way, the company has some very good fundamentals here, but the price is below that 13-week moving average, which was adjusted. And so the stock becomes a sell rating. That's our line in the sand for when it's time to consider getting out of the stock. Tightening stops, buying protective puts. There are things you can do to protect yourself against those stocks. But when that stock falls below, we say that it's time to consider getting out of the stock. Again, if I go back into a graph, we'll go into the top stock. Remember, you can see the recommendations built in right here. And there's some good examples here of just what it looks like. So the stop price is here. The stock became a sell-rated stock back in May of this year because it had fallen below the 13-week moving average, or our stop criteria. Moved back up above that stop, but hadn't quite begun to diverge away from the stop criteria. RT needed to get above 1, even though VST was. And then as the days progressed, it finally reached that buy rating because RT was above 1, VST was above 1. It was diverging away from the stop criteria. Okay, and that's what we're looking for in the buy rated stocks. Okay, so just some examples of that. And then knowing when to get out of those stocks as well is very important. Let's go back and take a quick look at the Rambus graph, and we'll add the recommendations there too. And it just became a sell-rated stock just a few days ago, even though it's trying to bounce back today. Now, it should go without saying, once you purchase the stock, if you already own Rambus, you should know what your criteria is going to be before you hit the enter button and know how you're going to manage that position. But just understanding that, the sell rating really is our line in the sand, and that, there's no indicator after a stock becomes a sell that we say, okay, well, now you really should sell the stock. Okay, really, it doesn't work that way. But just keep an eye on that sell rating. But certainly, as we know, the buy ratings, knowing when to buy, okay, as you watch the stock, and as I noted earlier, and Angie notes in her essay, I don't care the rating of the stock. You're still going to make sure the overall trend of the market is up before you buy any stock. And if you haven't already, I would strongly urge you to go back and watch Mr. Steve Chappell's special presentation from last week. A couple of weeks ago, also Glenn Tompkins did a wonderful special presentation as well, addressing, things like market trend, when to buy, how to manage the positions once you're in based on market timing. So some great information there as well. So again, the 3 keys to finding the best stocks: knowing what a stock is really worth, knowing how safe that stock is, and knowing when to buy, sell, or hold that stock. It is the core of what the VectorVest mantra is all about. buying safe, undervalued stocks that are rising in price in a rising market. And then I just kind of want to wrap it up here to finish this presentation by going back into Dr. D's book, Stock Strategies and Common Sense. And here I'm going to go back to chapter 3, where he wrote about how to pick stocks. I urge you again to read through this. He talked about rule number 1, favor undervalued stocks. Rule number 2, favor safe stocks. Rule number 3, favor stocks with rising prices. Okay, and you can go through and read this. The rules are there. Pick safe, undervalued stocks, rising in price in a rising market. So thank you for taking the time. I hope you enjoyed the presentation, and I look forward to seeing you next time.
Yeah.